Few years ago, I used to think or have a very bad mentality of how complicated it is to invest in shares. I would put my money in anything, I would think, but not shares, because I used to feel like shares need a lot of skills, economic stuff, people who have done economics and they know so many things to do with the economy. And maybe I wasn't alone, because before I did this video, I sat down with a few of my friends and asked them, so what comes to your mind when you think about shares? And I got very interesting feedback. One of them said he remembers Chris Kirubi. The other one said shares is just that thing you invest and you don't understand what it is. Then you can't even be able to tell what is this exactly investing in. Maybe I felt that is why most of us, maybe young people, feel like it's very hard to invest in shares or stock, because we don't either understand or we feel like it's a bit complex. Is it really that complicated? Because it's not. Let's use our layman's language today and understand why we need to invest in shares. Let's start by defining what are shares. What does it mean to own a share in a certain company? It means that you own part of that company. Yeah, you have interest in the company. For example, if you say that you have some shares for Safaricom, what does that mean? You're part and parcel of Safaricom. So if they are growing, you're growing with them. If they are falling or drowning, God forbid, you're also going down with them. So it means that you own, there is ownership. So normally, listed companies, and listed I mean the company has gone through the due process of being listed in the NSE. If they want to raise money, for example, in their expansion or the projects that they have, for example, maybe they want to have a new line of product, they want to invest maybe in a certain technology or a system that is a bit of capital intensive, they don't have that money, they publish some shares so that the public can buy the shares and they get the money. So me as an individual, let's say it's Anne, yeah, I decide, okay, so Safaricom want to raise money, and here I am, I have my money. Can I invest, yeah, in Safaricom shares? But of course, you will have to depend on so many other factors, which I will discuss in my future topic. But today, let's focus with ordinary shares. They're very basic to understand. Then we ask ourselves, where do we start? You begin by having financial goals. Your financial goals could be you want to start a business, you want to invest your money in, let's say, real estate. So here we say that your financial goal is to invest in shares. So you need to understand that shares is either long-term or short-term. Long-term is where you're buying your shares to keep them. For example, I bought my shares in 2017 for Safaricom. I don't intend to sell them. I intend to watch the company grow for some time. Then the share price will keep rising. It has shown like it's rising, it's been growing. And so I'm observing that. So the only thing that if you're investing it in long term that you earn is dividend. So if you're doing it in short term, what you do is you're trading. Like I buy shares today, let's say I'm buying them at 20 shillings. Tomorrow, the share price has risen to 30 shillings, or after 1 week or a certain period of time. So I trade those shares. I buy and I sell. So if I buy and sell and there's a margin, there's a profit I'm getting, that is what is called short term in shares. But if you're doing it long term, I would advise you diversify. Yeah, you cannot do long term shares for one company for like since 2017. I just buy Safaricom. It's good to diversify because you're going to spread your risk. Short term, you have to keep looking at the trend, what's happening in the market and all that, such you consider so many other factors before you sell, and so you make your money. So let's see, how do you benefit from investing in shares? Most people are like, so how am I going to gain if I buy my shares? So one of the things that we all know is through dividends. So at the end of every year, companies sit down and realize this is how much profit we've made, and from this profit, we want to give out a particular amount of money as dividend to our shareholders. They normally pay a certain proportion. For example, they can say we are paying 5 shillings of dividend per share owned. So if you had 10,000 shares and they're paying 5 shillings dividends, 5 shillings per share, that means it's 5 times the 10,000 shares that you have. That means you'll go home with 50,000. That's pure profit. Number 2 is share appreciation. For example, if you buy Safaricom shares today, yeah, let's say it's 26 shillings. Let's say in 3 or 4 years, it will be like about 50 shillings. There is that appreciation. There's 50 and 26 or 27 shillings. So if a time comes, you feel like after 3 years you want to sell your shares, you will sell it at a profit because you bought lower. Now the share price has gone up. So that means there's that difference. The share price has gone up. So when you're selling it at profit. However, remember, there is tax that usually the government puts in. So that means if you sell, the profit that you're going to earn, the it's called capital gain. Please note that you cannot say like currently if I own shares in Safaricom and the price has gone up that I'm benefiting, because remember, the share can actually be high today and can be low tomorrow. So you only say that you have made a profit only when you do an actual transaction, an actual sale. Yeah, when they're in your account, you have not made a profit. It's a very volatile environment, so it can be very high today, tomorrow they go low. The other thing is you can use your shares as a security to get a loan, maybe from a financial institution or from a friend who you need to maybe get money from. So if you need to raise money, you realize most of the institution will ask you for security. You give them maybe your logbook or your title deed. Shares can be used as one of the security. Yeah. The last one is you use shares also as an investment for future. For example, if there are people right now who have used actually shares to take their kids to school, because someone bought shares when they are still young, then the share has appreciated, now they can sell the shares and realize the money. So it's more of an investment, but this is only when it goes well, when the share price goes up. So you're able to benefit from those 4 items: dividends, that's profit; the share appreciation when you do a transaction; and then number 3, you're able to use it as a security to get or to borrow amount. Number 4, it's actually an investment for your future. We've already defined what shares are, how we go about the shareholding. We've even to actually discuss the benefits that you get after investing in shares. And now maybe let's look into when and where to invest. That's our next step. Please check out for the topic. And then also maybe I would like to know, what are your assumptions about shares? What don't you understand? What are your fears about investing in shares? Please, let's chat on the comments below. I'll really be willing to engage in a conversation. Maybe have that as a topic in future. So guys, thanks for watching. See you in the next video, when and where to invest.